Welcome, you hosers. Welcome to the Great White North, eh? It's been a fun time up here. A little bit cool, so I got my toque on. But we're having a good time in the Canada, eh? What can I say? Goxstein Media. The guy's hilarious, and he had a good point. More humor goes a long way with these very boring videos. So with that, hello, folks. Welcome. I've got a good one for you. All right, it has been a day. And a lot to talk about. I've been in a couple spaces. I learned a lot. There's been a lot going on through the week and a whole bunch of charts to go over. I am tired. It's been a long day. Lots of spaces. But I'm going to do my best to keep the energy rolling for you. But we're going to start off with a little bit of seriousness. Because I know that there are a few of you that you see a green candle and you get, I can appreciate it because I used to get the same excitement before the bear market beat the sense into me to actually read the charts. I get this. So I'd like to take a moment to be serious and see if I can address some of these concerns with the audience. So I'd like to introduce you to the therapy couch. Okay? So cozy on up here. Have a seat on the therapy couch. And we're going to have a talk here, shall we, folks? So please tell me, how long have you been experienced this knowing of the pivot? Is the pivot in the room with us now? Can you point to where the pivot is? Okay, I hope you guys enjoyed that one. Anyways, let's talk about the bull market. It's not. It's still a bear market because the Fed's not pivoting. Okay? Fundamentals are not changing. They're not going to come anywhere near pivoting until they're risking going into deflation. Now, inflation's pretty simple. So, all of a sudden, there's so much demand. People are buying more things. Well, the companies need to make more things, so they need to spend more money. They need to hire more people. So more money goes out into the world. And then the world is able to buy more things. And then the prices go up. And then the companies have to make more things and get more employees and put more money out into the world. And then there's more demand. And then price goes up. And we get a bubble. Now, deflation is interesting in the fact that, okay, well, what happens? People are buying less. Companies are making less money. They can't afford to pay workers. So they do layoffs like we're having from every company. And then there's less money out in the world to buy things. So the companies make less money and then they have to make less things and let people go. And then there's less money in the world. I hope this is making sense. This is inflation and deflation. Now, the Fed tries to put its foot on this phenomenon with quantitative easing and quantitative tightening. We are in a tightening cycle. The target rate is 5.25%. We're at 4.3. There is at least 75 basis points of hikes to come to get to their target, and I think they're going to readjust. 5.1. That's right. So they're going to, not 5.25, 5.1. But anyways, I have a funny feeling they're still going to adjust that rate. Now, the market's so excited that, we're starting to see a little deflation come down. Okay, prices are coming down. That means they can cut rates and everybody's buying and prices go up. Well, monetary conditions are loosening, not tightening then, because the market's not getting the point. Aggregate demand has kicked in. What's aggregate demand? Okay. I want a Tesla's $30,000. I want to buy a Tesla. A Tesla's $45,000. Well, that's even better. I want to buy a Tesla. This is the same way that Bitcoin went. Oh my God, it's $45,000 a coin of Bitcoin? Let me buy. Oh, it's $60,000 a coin of Bitcoin? Let me buy. Oh, it's $15,000 a coin? I don't want to buy. So, now, aggregate demand not really kicking in. in Bitcoin, but over in Tesla. All right. So the way the aggregate demand works is, yes, you have that same effect going into the bubble until people go, oh my God, $50,000 for a Tesla. I'm going to have to save up for that. Okay. So now they're saving up for that. Yes, I realize I sound like Johnny Chaos. Shout out to you, man. Someone tag him in this video. So with this, people buy. Okay, so they run out of money. Save. I'll buy it later. So this is where, we've reached the top of the bubble. Prices have to come down. Now, I guess this is comparing in, bear market rallies, dead cat bounces, where the chart goes up a little bit, doesn't get to the all-time highs, and then returns to it down. So this is kind of what aggregate demand will do to the market. So although housing prices are dropping and car prices are dropping, much like the top finally coming off Bitcoin, the bear market rally, aggregate demand, has kicked in. So now the same person's going, well, I gotta save. Well, I've saved $45,000 and the Tesla is back down to $45,000. I'm gonna buy a Tesla. Yay, souffle! It'll only explode in my driveway and then try and run people over. It's still a good car. So anyway, I got a Tesla chip on my shoulder here. I should be careful considering I like Twitter. I shouldn't piss the guy off, but the truth is the truth. So aggregate demand kicks in, and rush of people come to the market, and this deflation disappears, dries up like the haters' tears. Every time the market finally starts going down, they're like, we were right. Their tears dry up. It's like, yeah, wait till the next pump. So anyway, aggregate demand kicks in, and we have this lovely phenomenon where we get the equivalent of a bear market rally in the prices of goods. You can put the prices of goods on a market chart in TradingView and see aggregate demand causing bear market rallies, as you've probably learned to perceive them. With that said, yeah, we're seeing a little bit of deflation, but this is where aggregate demand is going to kick in. And we've obviously had a lot of oversold conditions for a very long time. So the market's antsy, and it's not out of money. There is demand left, and they haven't gotten the memo that they're addicts going through withdrawals, and they're not going to get more drugs. Quantitative easing yet. So they better go find a meeting. Now, with all of that said, do I want to do the Paulse chain news first and then get into charts? Or do I want to do the charts first? What do you guys think? After or now? Okay, let's talk about the spaces. So I started off today with John McAvoy, I think. Man, I need to get better at names. So I started off with a securities expert and had a little chit chat, and basically that space was a lovely little reminder of security practices. There wasn't anything specific so much to talk about as general concepts of security, best practices a little bit, but what really struck me is the crux of the conversation was, do you need security? Well, the answer is yes. But then the next question is, how much security? So a simple analogy I put through was, okay, our basic security techniques are good against our regular old neighbors. But three-letter agencies, if you're paranoid about those, require a whole nother level of security techniques. So, I had absolutely no online presence, no social media. The only reason I had a Facebook account was a girlfriend made one for me because she thought it was weird I didn't have one. And I never got around to deleting it. So, with that said, that's me for my life living over paranoid and avoiding three-letter agencies. My life has gotten a lot better since I've stopped with that level of paranoia, and I've made some social media accounts, and I've taken the time to get loud about opinions and actually given my name out to people. Obviously a lot lower level of paranoia, and I feel a lot better for it. Now, obviously I still have certain security protocols and just take a vow of poverty. I'm giving everything away. What is it? A vow of what would that be? Exploits. I'm a walking exploit. No, I'm not going there. So, realistically, for your basic finances, here's the way I put it. I'm a construction worker. I get mildly loud about politics and investing. A few people have obviously understood I own crypto. If you tried really hard, you could dig and find my phone number. And I'm not really worried about somebody taking a plane ticket to try and come find me and rob me and find out how much martial arts I actually know and how little crypto I could actually afford. Is it worth having Fort Knox security when I'm protecting that asset? Now, pretend I make souffles and I buy social media platforms and then I release everyone's dirty little secrets and I kind of upend the world on the one party, and that was the party that supported and got me into place, and the party that's probably a little closer with the deep state if you go into the paranoia circles. So if I were him, well, then I might be checking the onboard diagnostics and programming of my souffle every time I got on it to make sure some 3-letter agency hadn't hacked it and reprogrammed it to drive off a bridge. Because I'm a high-profile individual if I were that person. So that being said, who are you? Everyone should have their seed phrase properly stored. But I mean, do you need a multi-sig Gnosis safe? Do you need to be using Linux and Tails? Do you need a burner phone number in order to make email accounts to give out to people so your address is never linked by your utility bills to your phone number? So you give your phone number out at a bar and somebody goes to the utility company and then finds out everything about you that they know. And then with that information, go find out more. Yes, exploits are actually alarmingly that simple. So there is a whole community. I follow a few people. They may use terms like the rat. You can find them on my Twitter account if you're that interested in the security. Or you can start with some simple research on Tails and Linux and why people would use those when on the internet to protect themselves. Now, in most cases, your computer already has a built-in antivirus, staying off of naughty websites, not clicking links from strangers. I mean, I know when that black van drives around and they got that red lollipop hanging out the back, it's so tempting. Don't do it. Okay? We all got taught. Stranger danger. So, yeah, don't take links from strangers. They can be poisoned. I can replace an ahref link because I used to do HTML. I can make a bogus website that looks just like the real one and has links buried through it that'll just cake you in malware. I could probably do it in 20 minutes. Obviously, I don't want to. I would like you to not get caught by such things. So that was the takeaway from the security meeting. Now, moving to the next space with Katie from Power City. Oh, Katie of Crypto, or Katie on Crypto, whatever. Yeah, I don't follow a lot of people. I follow her. You can find her in the people I follow list. It's small. Keep my feed clean. Because I do agree with Richard Hart. It is very important that if I don't want the people I'm following to see crap that I don't like, I have to unfollow the people that are talking about the crap that I think can get other people wrecked. Not necessarily personal, because I like some of these people, really like some of these people that are talking about some things that I just feel sorry for them. They've been caught up in the magic, the show, the razzle dazzle. So, yeah, I was going to play the song. I really wanted to play the song. But Ray Charles is not copyright free and this video would get removed. Now, I said I'd never sing at you. Never, ever sing at you again after the Bitcoin song. Blame Bitcoin. Yeah. But I mean, I can't dance out to this song unless I try to sing it. So, to that whole concern that if you're talking about this stuff, why I might have removed you from my follow list. Not personal, just that I really don't like this stuff. He wasn't the 21st programmer. Google it. Google tells you what their 21st programmer was. It was a woman. So, with that said, bow, 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 bow. Hit the road, Jack, and don't you come back no more, no more, no more, no more. Hit the road, Jack, and don't you come back no more. Okay, I'm done. I was thinking about going into more of it, but no. Anyways, yeah, all right. That's how I feel about that. He's a scammer. He's a classier scammer. The kind of sophisticated con artist that would get themselves invited to every business meeting and clash with the elite top while they were raised from the slums. You know, brilliant actors. He's not even a brilliant actor. Whatever. He got a makeover and he's still got a few people wrapped around him. So, power to the narcissist, apparently. Oh, come on. We're all a little bit narcissist if we're on social media. Love the right narcissists. So, anyway. Yeah, the takeaway from the space that Katie and I were in with a few other wonderful people. Funding Jim stopped in, Walrus stopped in. I think Bullish was co-host. Was Corey co-host? No, Corey stopped in to talk. Who else was co-host? Oh, Long Vacation. That's right. Wonderful people. 3 hours of Paulse chain updates. And Katie recorded it. So you can go find my Twitter where I posted the crap out of it. And you can go have a listen. I even time marked an interesting thing for KG at 1 hour and 57 minutes. Possibly a couple minutes after that. I was just like, it wasn't before that. Now, the Paulse chain updates, we have a private testnet. This is awesome. The testnet is running 10-second blocks. This is really awesome. When it gets to mainnet, it may be 12-second blocks, like Ethereum. We're waiting for confirmation. Not much of a difference between A and B on that one. But it does affect the inflation rate. So once we know the projected APR of the blocks, then the inflation rate can be calculated. So we don't know that yet. So we don't know if inflation and deflation, how they're actually going to work in the system. We're waiting to find out. Testnet should give us a lot more detail. Moving along to the next topics on that. So the next updates with Paulse chain, other than the block side and speed. So because of copying the Ethereum state. So originally, Paulse chain was a copy of Binance, but with the Ethereum system state. So in a blockchain, there's the ledger and the validators. The ledger, what holds the place of everything, knows where everything's supposed to be, that's the system state. The validators, all they do is agree whether a change can be made to that ledger. So, the Ethereum ledger, the Binance agreement system. And Binance had some issues with their agreement system, which led to a hack and a rollback of their chain, which is not acceptable for Paulse. So that error was not immediately fixed by their devs and became too much of an issue, especially considering the Ethereum merger was complete. It's been stable, and the issues seem to be a lot less severe than Binance. So, by copying the Ethereum system state and the Ethereum validator type and making small edits, so that the validators, instead of 32 ETH, require 32 million Paulse, which is still a little bit cheaper considering it's 1.2 million Paulse to an Ethereum. So, that said, it should have been closer to, say, 38 million, but tomatoes. So, 32 million to run the Paulse validator. Okay. Now, also, like Ethereum, there's not an update yet, so you can't unstate your Ethereum. Well, That will be the case with Paulse until the update comes. Now, this is the wonderful takeaway I got. So, bonus. This is definitely a pro. We love this. We can copy Ethereum's homework, aka when the devs actually go to do their proper Ethereum update proposals, we can copy those proposals as soon as they're posted. Now, another beautiful thing is they're not immediately implemented. We don't have to copy those proposals. So on the chance that those proposals start leading Ethereum towards towards centralization, even more than it's been going, we don't have to copy that. That's brilliant. Now, con. Say with Paulse Chain, we specifically want an update and start working on something. Ethereum can copy our homework. Now, this means that really they're almost like partnership chains that have two different dev teams that are now almost working in tandem. This does seem kind of cool to me. More devs, more ideas, more programming, more eyes to catch errors. Yeah, I like this. But obviously, they're not the exact same thing. And Paulse Chain will move towards decentralization with updates. For sure. It's already decentralized, but Richard loves decentralization. Vitalik seems to be owned by his shareholders, which love centralization. So I have this theory that the two chains will start diverging. What this means is eventually there's the potential that years down the road, we won't be able to copy each other's homework anymore. If enough or large enough updates that change enough of the system states happen, it can cause compatibility issues. They will become different entities. More so than having the full tokenomics readjusted, gas fees readjusted, and a much cheaper, nicer network. So with that said, yeah, that's my takeaway. The conclusion is that I'm not worried about the two being really like each other because Paulse Chain will continue to move towards decentralization regardless of what Ethereum does. So if they have to diverge, they can. And if they don't, well, it just means that it'll only take half as much work to do upkeep on the chain, considering two dev teams are doing update on the same type of networks and posting GitHubs. So I really love that. Then we also had another reminder circle of the party token. It's not a thing. Okay? Forget the party token. It was an example. It was nothing more than if somebody draws some pretty pictures somewhere and says, it's like when this happens. So it's supposed to run just like the cake staking system, which means that you can do single-sided staking, get that APR, that's all wonderful, but that single-sided staking won't be for Cake Token. It won't be for PulseX. So what is that single-sided staking for? Party Token! No, it was an example. So had Paulse Chain launched last year, when Coast came out with the Wait Token, well, it wouldn't be the Wait Token if we had Pulse, but for example, came out with the Wait Token. Now, it was free airdropped to the sacrifice set for Paulse Chain. That's awesome. But when you're picking that airdrop, like, who do I give these tokens to? How do I know they're not going to sell them? Wouldn't it be great if they had to spend at least some time earning them? Probably. So what if I was able to go to Paulse Chain with my brand new token, Wait, and then go, hey guys, will you vote on whether or not you'll take this many million tokens and put them in a staking pool so people can earn them? And then PulseX will go, well, let's do some checking. All right, it doesn't seem malicious. All right, we'll put it up to a vote. Then, this is why 10 million shares of PulseX are important to have if you want to vote in the DAO. Now, that may not be the same voting system, but the incentive token vote, that DAO is definitely with the PulseX shares. I would think it's the same setup, but I'm going where I'm not a dev. I go off of what I hear, a little loose on those details. So, all right, reconfirm the single-sided staking. Reconfirm we have no idea of the APR. Reconfirming the possible upgrade ability of the network after it's launched. 3 hours of space. Wow. Obviously, these were the things that I was most concerned with the technicals. There was a few other points brought up, I think, about trading. Now, I didn't want to bust them at the time. Ratio trading. Rotational strategies is what that's called. So he was talking about owning two different assets. Now, this is what Michael Gayed and Roro and Jojo are all about. So risk on, risk off. That's a rotational ETF. What does that trade do? Well, there are higher risk emerging market stocks that can go up, or I forget which, the higher risk assets. And there are the low risk, the risk off assets, such as bonds. Now, when the market seems to be going up and up with high risk and going down with low risk, the rotation should kick in and swap over, or it'll wait until it's bottomed and he's got a specific indicator to cause the rotation. But you're looking for an imbalance between the assets, and you hop from the one where you're wealthy into the cheap one so you can scoop up a lot. This is what all the whales do with their stable coins, de-risking, and then their risk-on assets. It's rotational strategy, not ratio trading. Ratio trading is what happened when the Ethereum fork launched, proof of work, and they had no stable coin to actually pin to but the forked one that didn't have a pegged value. So suddenly 1 ETH was worth 100,000 USDC, but those 100,000 USDC were worth 0 cents. So, that's ratio trading. Okay, so there is, now, that said, rotational strategies are great if you can understand when the market's moving and about to shift. So this is where Michael Gayed had a really rough year because risk on and risk off went down together. That's not supposed to happen. But we're almost at the point in the market where people are going to be doing the rotational strategy and moving from risk off to risk on with the crypto market, but not yet. Okay, so there were a few good trading strategies that were discussed. And then there was also some more commentary on people doxing themselves. So, I mean, I don't go to great lengths to hide myself. If somebody really wanted to find me, they could. But I had my experience with this channel, and I came on right off the bat, and nobody trusted me. They couldn't see my face. And Maddie was like, come on, with Liquid Loans, we'll do an episode. Okay. You gotta show your face, though. Oh, wait, I had to think about that and get back to him. I'm glad he did it to me. It opened me up. It made me feel a little more connected and a part of the community. It helped people accept me. And I realized if I want a little bit of trust, I got to give a little bit of trust. I appreciate compromise. So there are a few people in this space, like Funding Jim or Trevor or Sever, that know my real name because I chose to trust them because they trusted me with the information. I'm working to build trust, I guess. Like, I'm not sure what I'm doing here, folks. It's a hobby. I'm not making a crypto. I'm just here to educate people, and it's fun. But somehow it seems to be taking on a lot of momentum. I never thought people would appreciate it this much, and I'm starting to consider what it would be to be a full-time career, what my real goals would be. But in the meantime, making friends and learning to trust people a little bit, I think has been very important. Because it's not that I work with Funding Jim or Trevor or anyone in this space, but I mean, I occasionally have ideas. I don't mind crunching numbers. I have conversations. It's not employment or a job, but in that, if people are going to be telling me about their problems, they're probably going to want to know I'm not going to go shoot my mouth off about their problems. And at that point, I usually feel like, let's reassure you. Here's my name. If I ever slip and shoot off about your problems, you can come hunt me down. It's my logic. So trust a little, get a little, and this community has welcomed me right in. I literally feel loved. I actually feel guilty about not following people back. Like, Twitter was a joke to me. But it's at the point where I have friends on there. I have friends I don't follow. And that comes back to the original conversation. So now that I've gone off track enough, and I think I've caught you up on what I thought were the important parts of these spaces, although there was so much more information. There was even, trustless bridges. Okay, it was a 3-hour space. I might have had a nap. It was a long day. I fell asleep for like 20 minutes. Missed a part. So, go and listen to that if you want to find it on my Twitter. Now, let's have a look. First off, Lockheed Martin. We're entering a Cold War. I don't like Lockheed Martin. I wouldn't want to give them my money. But since they're paying massive dividends, I also can't afford their stock. I'm not that wealthy. But they are paying massive dividends. I can appreciate wanting to take the wealthy people's money from them and then pour it into crypto. So Lockheed Martin has just crashed down to find support on its 200-day moving average. It may shuttle around a little more on it, but I have a funny feeling it's not going to get any lower. Well, this is going to be the main support at 400. I have a funny feeling it would kiss off of that peak at 418, 420-ish if it even got under the 200-day moving average. The RSI is showing oversold. However, we do have red impressions on the Instagram. We can see that below the moving average does not happen often in this chart. So this is what we'd call a safe bet. You're not going to get massive gains in the numbers, but they're going to pay you dividends. It's something you can sit and earn pretty much the entire Cold War. I don't appreciate it, but there are things in the stock market which have been in massive bull trends. Massive. That's why I didn't even bother marking out the horizontal lines. I'm just showing you defense contract spending is alive, but normally when you feel, oh, Russia invaded, oh, that stuff's coming up, like, this is the good time to get in. There will be a point where this gets overexhausted and has hit the top of the bubble. And how soon is that? Also, if suddenly peace erupts, Cold War stops for whatever reason, off a cliff. Okay, this is the risks involved with chasing the rewards. I don't like the stock market because it's a rigged game. So I've almost felt like I'm new here and I'm trying to learn from Michael. But I watch him stress out because of his year of hell, as an anomalous year ignored all statistical backtesting, mathematical, historical facts. You go and add up what it was doing certain days, find probabilities of its movements, and actually make a weather forecasting model like I did for Paulse X buy and burn, but for future chart movements based on probabilities. I can really respect that math. It's sound math. So his thesis is, with this sound math, by doing statistical backtesting and using an actually mathematical based strategy with particular statistically beneficial trade signals, that you will get an optimal outcome of beating the market. If you're very patient and you use this rules-based approach in a regular functioning market, it should work. There's no reason it shouldn't. It's flawless. There's nothing wrong with his strategy. Well, then why isn't his thesis right? Well, it does require two parts to the thesis. The first part I don't argue with, but the second part assumes that the market is playing by the rules. And I mean, it's always playing by the rules, but the rules it makes up over in Wall Street. An anomalous year, an entire year out of 100, everything went and did the opposite of what it was supposed to. So his mathematical winning strategy became the most mathematical losing strategy. my thought here is really how, like, we're into the second year of an anomalous year where stocks, the SPX, the NASDAQ, all went up. And, oh, the bonds are going up, the rotational ETFs. Like, they're moving up together and they're moving down together, the risk on and the risk off assets. The anomaly isn't quite broken. Now, he's quite right. Conditions favor a melt up. And it's not the end of the world. So these things are recovering. As I pointed out, the bond market collapsing would be the end of the world. But we're not at the end of the world. So I've been pointing out that it looked like bonds were bottoming, that I was waiting for a confirmation signal. It's almost here. The confirmation signal that the bottom is definitely in will be when the 100 crosses above the 200 and the 200 is curled up. Now, because of my love of bottoms, I picked it out. But it wasn't mathematical. It wasn't statistical. It was my savant brain looking at a bunch of patterns that I can't even articulate in words, and then seeing how they click together and going, there, that one. And I can't even properly articulate it. I'm trying to learn TA, so I can kind of explain why my brain sees what it's seeing. Because at this point, it's almost feeling prophetic the way I catch these bottoms when I'm looking. So, is that the actual bottom? As I'm watching, it will not fall back below this green line. This green line is support. However, it could crush through this green line. So let's make it red so it stands out. So it could crash through the red line and ride the green line down for a bit. I doubt it would make a double bottom. So if we saw this crash down, I think we would catch support at 95 here on the AGG Aggregate Bond Index. So let's mark that with a red line minimum as this is where I feel where the graph would test a higher low to confirm the bottom is in bonds. And then from there, fully recover. Yeah, that could happen in March. I have a funny feeling about March. Again, a feeling, not the mathematics. I have both things going on in my brain. Trust me, it confuses the crap out of me. A mathematical savant that doesn't need a calculator because I'm a walking calculator. You're either right-brained or left-brained. That's generally how people go. But, I used to be a DJ. I play guitar. I paint. I sculpt. And I do mathematics. Both sides of my brain are on. I'm also ambidextrous. So I see things that I can't always describe because it's not always the same side of my brain seeing it. I got a very weird mind, and I don't think no matter how much I ever obsessed about it, I'll understand it. But in the meantime, I love sharing it with you folks. So let's have a look through the indexes in full, which we haven't done in a while. Now, what I had done here, out of some early anticipation, is slide. Oh, look at how it just lines up. That's our regular downtrend line. And we bounced right off the point where I thought we would. The market is really just so full of resistance on this that we broke through it, which means I got to slide her out. I still think this is a shorting opportunity because the fundamentals haven't changed. The Fed still has to fight inflation. The SPY pretty much always looks like the SPX. I just make sure they stay in tandem so I don't have it marked. NASDAQ, not far off, but we've established I've had to change my trend lines before. Now the NASDAQ has broken this point. So I'm just going to move it back here where it was and ignore it. Because I'm not sure how that this, if it's going to drop straight down and ride this line. The market is always surprising me. The Dow Jones broke its resistance, caught support on its resistance, bounced off the 200-day moving average, and has continued to move it up. Wow, the faith in the industrial complex. This is why I know the bottom's not in, folks. The bottom is not in. Look how low that volatility index is. Oh my god. The bottom's in. Now, the Maverick had a pretty good point. Now, I was tracking the bull line trend of the dollar. And yes, we've dipped under, but as I've established another TA, just cracking under it is not 100% guarantee that you've lost the trend, that it can come back above and catch support again. Examples. I can't undo that. Man, there should be an undo button on this app. I just deleted a title. At least when I accidentally delete a market chart, I can easily bring it back. Adding the titles is a pain in the butt. Okay, so this is a bull trend line. This was a wick under it. Now look, we got back above it, got support and took off. That's what I'm talking about is still possible because we're still early. I really gotta get stocks label back. Oh well. So we have a wick under. Now, why do I have this gold line? Well, because I have a small disagreement with my hero, Maverick of Wall Street. He was holding 103 as the doom line of support. It lost 103. And 103, important, very, but I feel 101.5 more important. That's why this has been gold on my chart for a while, which you may have noticed before. So although we're wicking under the trend line here, I do believe that the dollar will catch support on this line after this weird mania trade of the market. Now, the dollar's not going back to make all-time highs. My question is when it's going to come back to kiss this resistance line. Because the dollar's not going to zero. Not yet, anyway. One day, eventually, like the dollar is slowly going to zero. But anyway, that's neither here nor there in the market cycles. So, yeah, inflation's not tamed down. We're having aggregate demand kick in. The Fed is going to come out swinging and have to fight harder, which is where originally I had assumed 50-50 and switching to 25 through the 3 quarters this year. And I had predicted that back in September? I don't remember. It's been a while. So yeah, I like to predict the next several moves of the FCMC, but I'm having to reassess my beliefs here because of the way the market is reacting. I have a meme on Twitter for this. I'm gonna keep raising rates until you a-holes stop buying monkey JPEGs. He's not bluffing. Yellen, old Yeller, Secretary Yellen, is complaining the government might go into default. We might not be able to pay our debt. Really? That's a wonderful state for a nation. So the Fed doesn't care. At this point, it can't care. It has to deal with the inflation. If it goes, now, it's not impossible. Okay, I think it's stupid and crazy, but I learned a long time ago not to bet against stupid or crazy. So let's discuss the possibility here. What the Fed should do is raise 50 basis points February. And then if the market gets another one of these rallies, he should be throwing another 50 basis points in March. Now, it's not even about the Fed funds rate. It needs to be about spanking the market into behaving, into letting there be some deflation being some lost months or year in the market, not, oh, well, it's been 6 weeks. That's been a long enough bear market. Back to the moon forever. That is not long enough to recover inflation. And as you buy up markets, you make his job harder. So that's what should happen. Now, what could happen? What would be stupid and crazy? Okay, let's have a look. So, we're going to throw 25 basis points this meeting at it. And we're going to talk all about another 25 and another 25 to get to our 75 more points, to get to our 5.1. Oh, yay. And you're going to do this, and then Yellen's going to say, oh no, the government's blowing up, you got to print more money to save us. Okay. And there'll be so much pressure because everyone's scared of a market pop that the Fed will take its foot off the market's throat and stop raising rates. Maybe, just maybe, even drop them a little. That would be horribly crazy and stupid because of aggregate demand. If the Fed right now, before inflation has gotten to capitulation, well, inflation will do just what the market has been doing all bear market, and having another sucker rally and another sucker rally because they can't understand a word as simple as patience. So the Fed has to fight inflation. It has no choice, because if it doesn't, the crazy stupid, inflation will come back just like it did in the 70s, even worse, just like it did in the 70s, which means they'll have to raise rates even higher than they originally wanted to, like the 70s. But unlike the 70s, with this massive bubble and the problems already cracking into the market, they will guarantee, if they went through the stupid cycle, lower rates and wait till inflation kicks them in the face again, and then they got to chase it again. We're not looking at the guaranteed recession. We're looking at the guaranteed depression with a chance of complete failure of the dollar this cycle, like people want to predict. Fiat currencies last over 100 years. Some of them can even get to 150 years on the cycle, I think. Might be 120. But if you go from 1942, where we went fractional, or 46, where we went fractional, okay, you're talking 80-ish years of the fiat cycle. Well, that would mean 20 to 40 more years in it, folks. Especially if the Fed isn't crazy or stupid and does what they should, what they know they should. So we've got some really scary times ahead of us, because they're not going to let the dollar collapse right away early from the cycle. Now, also, I say this if because fiat, fractionally reserved but gold backed, but completely severed from gold. So while there's this fraction reserve, well, they have to maintain that fraction. Now, the Vietnam War destroyed that ability because they're addicts and they couldn't just stop spending on the war. So Nixon in 71 severed the last remaining ties, a little less than 30 years later, that the dollar had with gold, and made it entirely backed by debt to future people. Like, if you decide you want to have a baby with your partner because you're very happy that you've gotten in on Paulse chain sacrifice, you know you're going to be rich and able to afford the kid, that's really awesome, because you're going to need it, because your kid is going to be born $147,000 in debt because of the government's reckless spending. Technically, every single citizen in the States at this current point, being born today, is being born $147,000 in debt, according to the national debt, divided by the number of people. See how that works? So, that's very, 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 very bad. But that's exactly what they need to happen. Without creating more debt, they can't create more dollars. And without creating more dollars, they can't ever pay back the interest that needs to be repaid on that debt. There aren't enough dollars in the world to pay back the interest on the debt it took to create the dollars in the world. So you need more debt to create the more dollars in the world, not less. But they went too fast. They created so much debt that it couldn't be manageable. It can't be fathomable. People can't even understand it. They're not even sure what's going on in the market. Then you have the top of the bubble. You have all these problems. So, fiat-wise, if you go from 71, well, gee, folks, we're just a little over 50 years. If you go from the 40s, we're just a little under 80 into the fiat cycle. There's more room. Like Dan Aykroyd in the 80s was doing the jokes about, you're going to be a millionaire. A house will cost $1 million. A car will cost $500,000. Well, houses broke $1 million. I have several friends that technically are millionaires and flat broke because of the areas they live in. I have one that's a CFO of defense contract. I probably shouldn't be going into that, but they make 6 figures a year easily, but with their family and a drunken husband that spends too much, it's not enough money. They're a millionaire. The car costs 6 figures, not 500,000. But wow, like the Dan Aykroyd joke from the 80s is now the reality. And so no one can fathom, you can't have it keep going up. Once upon a time, when Japan started with yen, I'm sure 10 yen got a cup of coffee. By the end of the collapse of the yen currency the first time, it was something like 10,000 yen for a cup of coffee. So, yeah, in the 50s, it was 25 cents for a pie and a coffee. Slice of pie and a coffee. Now, it's $25 to go to Starbucks for a slice of pie and a coffee. Wow. So if you told someone in the 50s it would hit $25, they'd scream, the economy would collapse. There's no way you could do it. The world would stop functioning. So when someone suggests $250 for a cup of coffee and a slice of pie, your brains want to explode. It's not possible. It has to shut down, but it's possible. It's very possible. So no, this isn't the end of the dollar yet. But the longer they can drag out the inflation, the longer it takes to be $10,000 for a cup of coffee, the more room they have in the cycle. So every time they get greedy and print too much money, they're basically shortening the lifespan of the fiat dollar, but they're not killing it. Got it? Okay. So since it's not going to die, that means eventually it will recover. It's not the end of the world. Okay. Where's it going to recover from? Now we're talking, because the Fed's not done. They have to fight inflation. They need the dollar to become strong again. So whether they have to employ scare tactic speeches or massive rate hikes, or even actually start unwinding the balance sheet at such speed that they cause the panic capitulation event directly, they have the power. They will use it. So I don't like to bet against stupid or crazy, but in this case, stupid or crazy, pretty close to the end of the world level stupid and crazy. And, Bert the Turtle hasn't been on my channel for a while because duck and cover doesn't need to be a thing, because, we've been in a Cold War for like a year again now and nobody's dropped one. They're all too chicken. They're not crazy enough or stupid enough yet. So, same with Powell. I see him as a little more stable than Biden or Trump with their nuclear footballs. So I'm a little less worried about that level of crazy and stupid coming from Powell. It's not impossible. I'm a little less worried about it. So with that thesis, yes, they're going to fight to kick the dollar back up, to at least get it to have a bear market rally from this point and find a spot to probably come back and test 105 since it's fallen so low. Now, if it falls below this magical gold line, I'll reassess the target of bouncing off near 105 near the Wednesday of March, 22nd of March. It's funny, that would be, what, a week and a half after the March FOMC meeting to get some more steam in it. It's a possibility. It'd be funny how that lines up. Because everybody looks at the chart like, the chart can't predict the future because these things are happening. Well, it's funny these things happen at a time that allows the chart to correspond with it. Because the chart, people are reading the TA. Like, the chart is doing something. The chart is literally an accidental base read of the world. It's like putting your hand on someone's chest and feeling the pulse, feeling that beat, and thinking, that's a set of drums. There's a little drummer man in there. And then building your entire thesis about the human body about a little man with a drum kit in there. When in fact, that's not what's going on. And I feel like TA looks at these charts like the drummer man in the chest. And I'm seeing these as actually taking the living, breathing pulse of the world. Market charts are an expression of the psychology of our species and the events of our history. And that's a whole nother conversation. So, yeah, that's still my outlook for the dollar. I know I was a lot more optimistic about it coming up and at least coming back to test the 200 moving average, even if it starts cutting down. This red line, that red line, it's gone down too fast, too hard. Not the end of the world. The Fed's not done fighting. Now Tesla, the souffle, massive pain, and still hasn't beaten its local resistance. Uh-oh. The 100 is clearly under the 200 and all the way down, curling down, while we're fighting to hold the bottom out of the red zone. Now, if it breaks this resistance, like the next test will be surpassing the 25-day moving average. If it can do that, it'll likely get past this resistance and then move to touch 50. But I believe it'll run out of steam before it gets to the 100. Keep in mind, the 100 will be falling with it, or at least leveling out, probably around here. So $200 a share, absolute max for this sucker's rally, in my opinion. I don't think it'll take all the way out here, so I don't think this Tesla rally is going to get back up to touch this resistance. I have a funny feeling that 168 will be the max of that rally, probably just a little shy of, as it kisses off the 50-day moving average and gives up. Tesla has been oversold for far too long, far too nasty. RSI and MACD beaten down, way too many U channels. Wow, I really gotta get that ad blocker for this. But here, this is the weekly version of Tesla. And do you see massive oversold conditions on the weekly? It's due a rally, even if it just comes up to kiss the moving average. And we should at least start seeing green impressions on the Instagram. I don't think it'll cross over, but it is due a rally. There are several people getting in on call auctions and playing short-term rallies in this. I don't recommend it. Car market is highly overinflated, and Elon is still taking all kinds of crap from Twitter and everything else. The bots are back. It's not good signs. Now, I also look As you know, at Apple and Netflix, let's get off the weekly here. Apple is not in the same oversold conditions. There isn't the same momentum for a rally, and the RSI on the daily has topped out. So Apple is indicating that it's still respecting this trend line angle when it crashes. So another shorting opportunity possibly at 137 coming up very shortly next week, before Wednesday, maybe even. And when Apple starts to fall, usually the whole market goes with it. So I don't think Tesla has a lot of rally because I think Apple is still leading the sentiment. Netflix is still laughing their butt off. However, this, you can see that line, we'll just copy it exactly. It's perfectly resting where it had the pre-crash support that it dropped from so radically. So, do you see what I see? And that is the 100 moving average has crossed the 200 moving average. It is above all of the moving averages. It is at the last major resistance for this chart. Again, this is overbought conditions. We'll see a correction. Where will it find support? Will it bounce off the 100 moving average again? The 200? I don't think we're even going to need to touch this bull trend. Netflix, like I said at the beginning of the market, didn't care. It had its maximum pain. Now, of course, then I was saying, I'm pretty sure. Of course, I don't know. Anything can happen. Next crash, we'll see how much farther it'll go down. Now it's gone so up again that when we have our capitulation event and our mass panic in the markets, there's room to fall again. Doesn't that suck? Schmuckers, though, Kellogg's, staple foods that you can't do without in that same category. You know how I've been talking about defense contracting and bonds recently. Moving along now, heading into silver and gold. We are still seeing some massive pumps and rallies. Old man gold does not like to move unless old man gold is sure and calling BS on the markets, if not the dollar. That, guess what, guys? Gold thinks it's recessionary time. It's not a great indicator when gold goes up. It doesn't go up very well, or for a lot of reasons. Like, no one really knows why gold goes up. We look at what it's doing and what other things are doing. Like, what's gold doing? Well, what's lumber doing? Lumber and gold went up at the same time? So, if gold's going up and lumber is going down, we are in bad recession territory. If they swap and gold starts going down and lumber's going up, then it looks like what's the opposite of recession? A growth cycle has begun. Wonderful. Now, we're talking mini cycles, not macro. We're talking micro. Like, I think this will be applicable on the macro as well. But then we have odd days. They're moving together. This can happen from extreme market conditions, a change in sentiment. So, extremely oversold, stressed, angry market snaps at the excitement of a rally. It loses its ability to think clearly or rationally, and we see all kinds of assets going up together. Also, the market gets scared when Russia invaded. Bonds and gold and the dollar all went down together. Wait, what? Like, didn't know it was possible. So extreme emotional events for the market won't cause those anomalous "we're moving together" moments. the issue of Michael Gadd's Year of Hell. So right now, I've been talking about the bottom in bonds, it bottoming, or sorry, in lumber. I really thought we had lower to go than 360. I'm pretty sure lumber's going to reject like it did before off of the 100 and start coming back down to this line. A double bottom. It seems a little soon for a double bottom. It would be ignorant of me to not record the line that's been established. There we go. The established important line, but we will switch this at least to blue. It's not that important. So we're going to see how it reacts on this line, but I still have a funny feeling wasn't going to find any support till at least the first blue one, and it may not actually find its bottom until the red line. But we know how I feel with the red lines. Those are absolute worst case scenarios that I just more or less hope won't happen. Don't think they will, but also do not rule them out. Basically, the line just before the red one is where I'm aiming or hoping the bottom would be. We see lumber round. We'll be able to see a recovery in the housing market as houses are built. Now into the crypto. Bitcoin is standing here like a numpty in the cold. The 200-day moving average is still pointing down. The 100 is still below the 200. This is a fake pump. Bitcoin got confused and didn't want to be left out and then doesn't know what to do. Take the dramatic out of that. Make it, there we go. Doesn't know what to do because it stopped right there. So why do I say that? Well, we look at Ethereum. It stopped and then it came closer down to its support line. Bitcoin kind of stopped, dropped a little, went, I don't know what I'm doing here. It's not even a support line, is it? Nope. Why am I here? Well, it might be on somebody's chart, not on mine. Okay, you came down and stopped on a support line. And, oh, is that the 200-day moving average starting to curl up? The 100 is still below it, but there's at least a little curl. Well, that's promising, but doesn't explain why the breakout. Here's why do you keep saying BNB is in the lead? Well, at the time, maybe just a little. I mean, it's still trading through the evening. I'm not going to bother adjusting it. It had grabbed support when Ethereum and Bitcoin grabbed support right on that line. And where it stopped, I had to readjust this. Forget the wicks. Bam. It bounced right off. Other than that massive wick, it bounced right off this resistance and stopped. Oh, Binance found a line, stopped, grabbed support. Ethereum and Bitcoin followed suit because they didn't want to be left behind if this was the bottom, is what it looks like. And that scares the crap out of me. BNB should not be the lead indicator. Binance scam chain is not where the money should be chasing to make everyone else move around. It's a scary thought. And now Hex. All right. So, taking a look at Hex, the 200 moving average is way up here. It bounced off 2.7 as resistance. Didn't even make it to the 100. There's no curl. There's no cross. It's been a very long bear market. There is a chance that this is another bull flag that is going to find some support and go up. But I'm so beaten down. I'm so run out of energy. I just can't even get excited until I see the confirmation signals that the bottom's in. Because, like bonds, this does feel like a little double bottom. It does, but I just can't get excited. So, another fun fact, the market psychology charts. maybe we should bring that up while I talk about it. What do you think, folks? Shall we do the market psychology? Let's. Wall Street cheat sheet. And that rhymes so nicely. There, I think we should be able to see that well enough. So, where in the market are we? Wow. Isn't it funny how everybody says the entire market does this? You remember how I pointed out Netflix had its mass pain. It had its panic event. You want to double check its panic event? I'll show you. I'll show you. In case you weren't looking the first time, you see that gap in the chart? That's a panic capitulation. This would almost be disbelief for the cycle of Netflix, which is not the same cycle as everything else. Alright? So, when I talk about Hex, let's talk about Bitcoin, shall we? Now, Bitcoin officially blew off its second top and started the actual bear market November. That's basically about when the stock market and everything else was picking it first. Normally the first blow off top should have been it. But this was the start of the bear market for Bitcoin, which is a slightly different start time of the bear market for other things. So if we're going off of a time scale, a normal bear market lasts this long. Well, if they all started at different times, they all end at different times. So they're all in different phases of that psychology chart. So it matters which asset you're looking at to figure this out. Now, big tech stocks are in denial. All right, Tesla and Apple are in their denial phases. Now, Bitcoin and Ethereum are fairly institutionalized. They may be in their denial phases. But Hex, so drop, rally, drop, massive drop. Okay. So let's have a look at Hex. Alright. Okay, so that market cycle chart. Rally, panic. Oh. Hex had its panic. Okay. So I sat angry for a while. And this little bottom here and depression, that might be what I'm feeling about Hex because of the rest of the market. It started sooner than everything else. Could that have been 1.4 cents? Which means the rally is just this. It's not a disbelief rally in Hex yet. It's just the other side of the absolute bottom of the V. That's not that big to get excited about yet, folks. But I still have optimism that Hex went down first. Hex blew off its top in September, 2 months earlier. And altcoin season tends to come before the layer 1 networks. I think Hex still counts as an altcoin. Oh, and then what else did we get? Paulse chain news. So although the technicals still look like crap, although the logarithmic line of resistance is still looking quite scary, we've got news of Paulse chain. All it takes is a couple big buyers, an excited god whale, and it can jump over the 200. See back here, we broke the 100 to go to the 200. And then lost it. Here, almost broke the 200, and that's where panic set in. So, when we get back, that's where I've gotten so jaded. My bottom buying skills. You know I love my bottoms. But beyond that, I didn't ape in with my extra money. I just am too beaten. Before I ape in with my extra money, I want to know my extra money is in the bull cycle. I don't care if I lose some gains on it because I didn't catch the absolute bottom because I was chasing it. I caught it. I DCA. I just $50 a week. Well, $25 a week goes into assets. 25 goes to saving for big buys to take advantage of some capitulation event. And then maybe I'm so depressed I missed it, but at least I was still DCAing. So with all of the news, it's possible we could go to test some of this stuff. Maybe try to break above it. It is the year of crypto spring. Altcoin season is coming. But please, folks, be patient. Don't ape in. This whole year, unlike buying on the way down and feeling like an idiot as you keep losing, if this whole year is approximately sideways, that means you have a year to buy and not lose money at relatively low bottoms before next year's bull run in 2 years from now. Okay, this is a wonderful DCAing year. Again, if this crash has taken a year, this bottom could take a year. Market analysts are talking about a lost decade in the stock markets. That I don't believe. The Fed would never allow the deflation to spiral out of control that bad. Now, when inflation crashes so bad that they actually suddenly have deflation, then you will see the Fed turn around and cut rates. That would be the economic accident. If they not only get down to their neutral rate of 2.5%, but drop to 1% or 0 or -1, because then then the bubble starts collapsing in on itself instead of growing. And if it gets too bad, no amount of rate cutting will stop it. It'll become a runaway train, like a snowball rolling downhill. Not unlike the upside of the market couldn't have been stopped without the market just saying, no, you can't buy anything. It is what it is. So, market psychology wise, it keeps telling me that the artsy side of my brain says that was another bottom and that was probably the bottom and that little double hump was the double W. Now, in the fighting of the technicals, we could come down to retest it. If I see a retest of it, I will be aping in both hands. It is what it is. Decky has been keeping closer step with Hex finally. It's a perpetual. It should basically move the exact same way Hex does, but then slightly grow in value more, because you can't stake Decky. It's already staked Hex. If you don't understand that, go look at the Maximus DAO team. Look at what they're doing. Of course, they're getting a little production happy. Just let the assets you have run for a bit. Hedron. Always doing its things. Okay. So, I'm on log still. Haha, let's take it off log. That makes my chart drawing make more sense, doesn't it, folks? Okay. Well, I haven't been paying attention, but I kind of laughed. It's funny Hedron did this, because I wondered. I was like, instead of a Santa's rally, what if we have a Santa's bottom? That would be hilarious. Didn't quite see it in other assets, but Hedron's ticking along. Gotta say, still love the little things they're building in Icosa. Happy and rallying with the price of Hex. The perpetuals will do that. And Paulse. Poor Paulse. Okay. Oh, that's not even worth tracking. It's just shattered. When it actually tells me it's done, I'll consider it. In the meantime, let's move this over here. So, what we're looking at, we have a 200-day moving average starting. So Paulse, you can use it to make ASIC tokens, and the ASIC tokens can make Litecoin and make Bitcoin. Well, not real Litecoin Bitcoin. Pulse Bitcoin and Pulse Litecoin. They are real programming things. They're just not what people consider when they think of Bitcoin. So over here, Pulse Bitcoin chart not looking so hot. It's not doing what Paulse did because Paulse has a massive utility. Pulse Bitcoin, which everyone's mining for, doesn't have any added utility. There's no more steps in this game to play, and nobody seems to be paying it any mind. And if that's the case, this thing that I hated, because it was a toy that had no endpoint that made sense to me, making a better Bitcoin, well, Ethereum is a better Bitcoin, Pulse is a better Bitcoin, any cryptocurrency that will let you transfer value that doesn't take 8 hours for a block to get 2 confirmations on is better. Hex is better Bitcoin. So by making Pulse Bitcoin, well, can you stake Pulse Bitcoin? No. So I already got Hex. Why do I really care about Pulse Bitcoin? It's kind of a meme joke thing. Don't know why it should have value. There isn't added utility there. The concept of releasing a token as an airdrop that needs to be used to create another token to do your business, awesome. It was kind of a brilliant idea. I got my Pulse D for free claim because I'm a Hex stakeholder, so I held them with a big bag of popcorn in disbelief that it keeps making all-time new highs. But alas, Pulse Bitcoin not doing so well. Haven't even looked at Pulse Litecoin. The ASIC miner's probably not doing that great, and I mean, it's taking a beating right now, but it hasn't fallen out of its bull trend. I hate this thing because it doesn't make any sense, but that's the psychology of the market. The market values it for its reasons. It assigns that value and it gets expressed through here. So since we have had a hedge asset, something that has been going up in a bear market against others, well, this is where originally Hex, because it is uncorrelating again, but it moved very differently from everything. Kind of when Bitcoin was going up, Hex was going down, and when Bitcoin was going down, Hex was going up. It was that contrary asset rotational strategy. So those micro strategy traders going in their week cycles or day cycles, hopping back between the two. And then you get the opposite movement. That's the psychology of that. That's why it would move in opposite directions. So I think right now, as we see a bottom, although the Hex is uncorrelated, it's still going to have on the chart apparent movements, which will, if you lay them over each other in ROI, won't be that separated, or lay them over with the indicators. They wouldn't be that. Oh, I'm sorry. I told you I was tired. So as much as I hate this thing, because it's had a good history already, I won't be surprised if for no other reason than being a rotational strategy hedge asset to de-risk into, it might continue to see action. We're in a painful part of the market, so we'll see how this plays out. If it loses this bull trend, I'm kind of like, oh well, I lost all my money. Wait, I didn't have any because it didn't cost me anything. It's paper gains that I haven't claimed, and they make my wallet look less scary while the things I'm DCing into don't sound so good, so I didn't sell it. And I'm not upset about it. If she loses that green mark like many other traders, the next high she finds, I'll probably bail out. Be like, yeah, whatever. Maybe I won't. Maybe I'll just hold my wallet forever as a reminder of this so I never forget. Lest never forget. So I appreciated a programmer developing a very clean set of code, dedicating that to hex stakers enforcing and rewarding them. And not sure who provided the liquidity, but large amounts of sufficient liquidity appeared for the project, and it wasn't a scam. So who cares at this point when there's so many scams after you? I'm almost like okay with at least they were honestly trying to make something good. I don't agree with what their concept of good is, but the intentions are in the right place. That said, the road to hell is paved in good intentions. I should know I'm full of good intentions, and I have been there a time or two, regardless. So, I should roll you through all the thoughts in my head. I think I have caught you up on our pulse chain updates, on everything I can think of at the moment, and my current thinking with the market charts. That Hex is lined up. It might have actually hit its bottom, but I don't believe it. But I think I'm psychologically scarred from the bear market. I'm looking at the psychology chart, I'm like, I just can't tell you anymore. The tea leaves are starting to get quiet, and I'm using actual technical trading indicators and like an actual trader. I'm like, until I see my confirmation signals. You guys see me use a single confirmation signal on any of the bottoms I called? Because I was not using the math and using the feeling. Felt every single bottom of that chart, but had no idea there was more bottoms to come. Just like, whatever, at least I caught the bottom. Now, using these math indicators, again, thanks to Michael Guyad for sharing his father's lectures, got a better understanding of how the moving averages should be read. That's why I've got the 4 line of the 25, 50, 100, and 200 day moving averages, folks. So that I can be doing math while I'm feeling things, because it is really stupid to go by feeling. That's why, although I knew in the moment that this was a local bottom, I never was sure if it was the bottom, because I wasn't using any of the math. The feelings, the tea leaves, only tell me so much. The math's the math. Not a financial advisor, but numbers don't lie. But numbers is not, you're taking a lot less risk. You're waiting for specific signals. You're biding your time. You only move when right. It takes out some of the impulsive fun of jumping into the deep end and buying my bottoms. It's a very emotional, very feeling orientated. So I've literally been playing with 2 strategies almost. Makes sense when I got 2 brains. That's why he's got a galaxy brain. He's got 2 of them. He's cheating. Anyway. Yeah. It doesn't actually make me any smarter. It just makes me a whole heck of a lot crazier. It's a miracle I'm not in a padded room and I get to sit here on YouTube and do what I want, and I don't have to wait for Thursdays in this crappy, like, brown tapioca pudding. You guys are wondering what's up with me. I'm tired. I should be in bed. I'm at now because I'm overtired now. But I promised you a video. I wanted to do it. So I've rambled at you. I'm not even sure I made sense. I might have actually fallen off topic. So if you made it to the end of this one, you get 2 gold stars. Count them. 2 of them. Congratulations. And with that, not quite yet. I'm so tired. I forgot to shill the thing that I'm obviously paid to shill. Except I'm not paid to shill, but I have received money from them. Assume I am paid to shill. I was paid to program. But I spend so much time with this project. I'm starting to feel like the smoking man from the X-Files of internet money. So you can't separate me from this anymore. I'm tainted. I'm biased. But again, this is so Paulse. Okay, I had 6 months. Wow, over a year from before 2022 to from 21 into 23. The whole time Hex has been taking my money on the bottoms. Oh, and this is why I stopped freaking out, because I have two assets. Because now, had I had massive amounts of money, rotating from Hex into this might have made some sense for me, but it's not easy because this is on the wrong chain. It's on Binance Scam Chain. So, as much as I talk wonderful about it, if CZ and the money laundering charges actually amount to something, all that investigation actually causes a huge headache for them. Those $12 billion in outflows finally have an FTX moment in the coming weeks. Well, Binance is going to tank, and we'll see that capitulation moment. If Binance tanks, Binance are jerks, and they love Hart's Law. They make you price the majority of your altcoin in their coin. So if I want to put in, say, $1,000 of stablecoin paired with IM, I have to have at least $1,001 of BNB paired with IM. The layer 1 token has to be the primary liquidity exchange asset for the layer 2 token. That feels like a word salad, but essentially, it means that they're just being jerks and make you play their game and buy their token to give your asset. They don't want you buying stable coins. They want you buying their risky coins so they can take your money. Now, that does hurt. So there's risk in the future. It's not completely free. Nothing is in life. However, coming off of the bull trend to make a local macro bull trend, that's sexy. And what IM's got going for it, other than the wallet beta, other than KG working his butt off, other than new features, other than, what has it got going for it? It's launching on Ethereum. You're getting a 1-to-1 copy, a free airdrop if you hold on. If you hold 1 billion IM, because I always go on about it, 1 billion IM is $86.79 right now. 1 billion IM on the Binance Scam Chain. Even if Binance were to go to zero, still holding your 1 million or 1 billion. They're launching on Ethereum. You'll get a 1-to-1 copy. They'll launch liquidity. This asset will be on Ethereum. So even if it were to tank on Binance, it would be separated. Hart's Law lives, no need for a bridge, no IM and IM bonded pair. They'll be able to move independently. The Ethereum one will be able to survive. And their timeline hasn't really shifted a whole lot. Like I was originally speculating, maybe audit by February or March. So I mean, this to me, okay. And then, I'm still getting another copy of this IM token on Paulse Chain. So even if I hate Binance, I can abandon Binance, enjoy my 2 free copies on 2 different networks that both get bought and burnt with those networks' layer 1 tokens accumulated from the wallet's swap fees. No, there's no reason I should go on about this. It's complete garbage. I completely see your point. I don't know why I keep talking about it. Don't buy it. So, yeah. I shouldn't sound so angry about it. Like, look at this. That's a lot of users to go up, but a bunch of these users were from the different activations of the referral program and giveaways of free IM, which had to be paused because no matter how stable they make it, somebody's coming along to game the system so badly that it's not given up on permanently, but there's no timeline on when it'll be reinstituted. For now, it's tabled. Something to come back to later. That won't even necessarily be part of V1, which means that could be like a year later. So they'll still be working on it. I think they're going to try one more time, and if it has an issue, that's probably what'll happen. Not sure. None of this is public information per se. Like it is and isn't. Gotta be careful here. Like the timeline and all this stuff has been said before. It does change, and then it changes back. That's the stuff that it's not exactly public information. Like they put a timeline on the website, and then they think it's changing, and then it turns out, oh wait, we're making the timeline, so we're just okay. Let's not tell anybody it's changing because you keep getting worried it'll take longer. Then we made a deadline. Okay, you guys are funny. I love how much they care about everybody. Like the only reason they get this concerned is because they don't want anyone to get the wrong impression because they care about the people that want to be involved in their project. They care more than anyone I've seen. Like, yes, Richard has great knowledge, great education, maybe better off to help people than KG. But when it comes to altruism, KG beats Richard Hart in spades. The guy oozes good nature, goodwill, and good vibes. Richard has said things such as, I don't care about FTX users. They're already wrecked. I can't save them. I admittedly got a little angry at that comment. I have dealt with people with mental health disorders and in extreme situations, and people, so like not people with mental health in extreme, like those two separate things. Together, it's even more of a nightmare storm. So when FTX went and blew up, that's a major event. Some of the people invested in it have those mental disorders. It's a really scary thing. They're not dead, like, unless their mental health got to them and they committed suicide. And if they're not dead, they can earn more money. If they can earn more money, they'll have more money to spend towards their retirement, which means they're still alive. There's still a chance to save them. Not to replenish their FTX tokens, but to still teach them for the next round around. And now, not saying Richard is callous, but that came off in a particularly callous sense. And I get it. I've even lately been saying, you can carry a message of hope, but you can't carry a person. Or you can lead a horse to water, but you can't make it drink. And in that doesn't sound as altruistic. Now, KG would lead a horse to water, sit down, pull out a friggin' acoustic guitar, and start singing, Lesbian Seagull, Lesbian Seagull, until that horse drank. That's KG. That's altruism. So, in that, he's definitely got Richard beat. So Richard is king of a lot of things, but KG is king of altruism. So I still love this project. I have hope in him, and I'm even pleasantly surprised that he hasn't been as naive as I worried he would be at the beginning. He keeps surprising me in wonderful ways. So I keep talking about it more. I keep getting more involved. And then suddenly, before I know it, I'm the smoking man in a dark room, pondering if Molder's going to be a problem for me this week. So, yeah, there we go. I have really ranted my socks off and given you one heck of an update. I was thinking about trying to get to 2 episodes a week, because how else am I going to get another 100 episodes this year? With how tired I am and a bunch of life things I have to accomplish, it may be 2 weeks until my next episode. And not a pulse chain 2 weeks, okay? An actual 2. But the way I've been feeling, if I can find the time, I might even pop one out on Wednesday, but no promises on that. I'm just promising you that, if not sooner, you will get one in 2 weeks. Okay, folks? So now you made it to the end, and after a fake ending, 3 gold stars! Stay frosty, folks.